All right, everybody, welcome to another episode Insurance 360. Bob here with my good friend Rob. What's
Tuesday.
going
What's
on?
going on?
Oh man, Friday, but it's crazy.
I feel like it's been a long week.
I don't know where this week went at all. I don't know what the hell's going on. It's just
Do we ever
it's
really
it's
know?
it's Friday, and I don't know, another day, another reg in Medicare. I'm sure, but it's just the way it is. But we're pretty stoked today, man. We got a huge special guest today.
Yeah. I mean, we've been bringing them on. I like, but we're excited about this one. And you know what? The topic is one we hear about all the time as well.
Yeah, absolutely. We have with us, and I'm gonna throw this out there, and I'm probably gonna miss a couple of things, but Christian Brindle, who, if you don't know who Christian is, you probably just have not been on YouTube. You haven't been on social media.
Maybe you're living under a rock.
I
don't
mean,
know.
he's got so many different things. You know, he's got like 4 different podcasts himself going on right now. So Christian, I don't know if it's a 7-figure podcast. It's the everything insurance services you do pretty much every day. Your spare time, I guess you're writing some books, trying to help people. And then I think you still sell some insurance and when you have some time there as well. But I appreciate you carving something out here for us, man. We're really excited to have you. How's your day?
Day's doing awesome on this side, guys. Thank you for having me, by the way. This is super exciting. I'm happy to be here and excited for, a great conversation. And yeah, it's a privilege. It's a privilege to be here.
Yeah, no, that's awesome, man. I'm so glad you could join us today. And there's a ton going on. I mean, you know the way it is in our Medicare world, and it's been worse even the last couple of years.
Mhm.
I mean, every time I go on social media, speaking of social media, there's something going on where are they trying to cut the products? They're trying to cut the agent commissions. They're trying to make it so the agent can't market or
Yeah.
talk to anybody. We got the new disaster recovery going into
Mhm.
effect here in a couple of weeks. There's just a ton going on, man. Are you seeing anything different in your world? I mean, you talk to so many agents and like us, you do a ton of training.
Yeah.
What are you seeing out there?
Man, I mean, I think you just hit it right on the head. I mean, it is almost like a daily thing, right? I believe it was either earlier this week or later last week. CMS drops this new ACA proposal, right? And so
Right.
we covered that on the podcast when it maybe a day or two after it dropped. Today, Dr. Oz is going in front of the Senate to about his nomination. So that's
Right.
happening. My understanding, like it either is happening right now or it's happening like in the next hour or something like that. So it's just like, every single day it seems like there's something going on. And I think you guys do such a good job at providing, updates for agents to know kind of what's going on about this stuff because unless you're just glued to it 24/7, it's kind of hard to keep up with for the average person.
Yeah, no, you're 100% right. We joke here is like we try to turn everything we do into training, maybe making it a little bit fun and interesting. And there's just a lot going on right now. Um, Somebody said to me, he's like, are you an influencer? And I said, an influencer. I'm like, Christian, what do you think of the word influencer? So
Yeah.
I almost feel like that's like putting me like at a Kardashian. Like I'm not even
Right.
sure. I think we're just, we're really mentors, we're trainers, we're
Mhm.
we're, we're really a lot more than just what I would think of when I hear the word influencer. What are your thoughts on that?
Yeah, no, I think, the word has come these days with such a stigma to it. People do think Kardashians, they think the Paul brothers, they think, all these different people that they're really famous for being famous. They don't really do
Right.
anything. Um, and I think that if you look at the real definition of the word influencer, it's someone that influences others. So in a way, you guys may be influencers, but you're a lot more than that, right? Like same thing for me, right? Like I spoke at an event last year, in front of like 700 agents, and on my title they put Christian Brindle, insurance influencer, and I'm like, well, I'm an agency builder, I'm a trainer, I'm like
Right.
the one word you picked for me was influencer. You know?
Yeah. Yeah, no, I hear you. I hear you. I didn't take it as a negative, but it's just like I feel like what we try to provide is more than that, right?
Sure.
Yeah.
Because to your point, there's so much going on, man. And And then we're just talking about Medicare, but you mentioned ACA. A lot of the agents are doing more than just Medicare. So they're either rolling with the ACA changes. You got the DOL going on with annuity
Yep.
changes over the last year. So their agents and advisors are getting hit from all sides with tons of regs, tons of changes. It's like you got to keep a scorecard to make sure you're being compliant half the time with what you're doing. I mean, you've really got to, keep track of everything. And that's what we try to provide here, which I know. And you were telling me you do your podcast like 4 days a week.
Mhm.
And it makes sense. I mean,
Yeah.
you have stuff to talk about every day. I mean, the changes, the updates, it's great that you're doing that. I mean, it just makes sense for people to join on a daily basis these days.
Influencer. That's such a word. Maybe you guys will laugh at this. I almost think we're more like a crossing guard.
Yeah.
Oh, there you go.
Because I feel like all the
Yeah.
time I'm saying, no, stop, don't move, hear me out. Okay, you can cross. That's how a lot of this is going for us. It's like definitely not,
exactly.
I mean, I guess you're influencing it, but
Yeah,
that's
you
how
got
I
CMS flying by down the street.
Yeah.
Hey, hold on.
slow down, 15 miles an hour, CMS, please.
Yeah, no.
Yeah,
And I think the word in itself isn't a bad thing, because like at the end of the day, like you are influencing others and providing them updates about things that are going on. But you're definitely a lot more than that. I'm definitely a lot more than that. So it's like, it's funny because when people throw out the word, the first reaction sometimes is, ooh, I don't want to be that. But
Right.
in a sense, it's not a terrible thing when you
It's
dig
appropriate.
down into.
No,
Yeah,
I agree.
yeah.
I agree. And you know what? I think the way everybody's digesting information these days, it's really a YouTube world. I mean,
Mhm.
just think about anything you try and do. Like if I need to change something plumbing wise in my house, what am I doing? I'm going to YouTube and I'm watching a video.
So I
Love
got
it.
my
Right.
garbage disposal
I
put
mean,
in.
yeah. And at the end of the day, I mean, that's how everybody's digesting information. And so
Yeah.
it really makes a lot of sense. And there's a lot of younger agents getting into this business. I mean, more than ever. I mean, not that we all wake up and say, hey, my career is going to be selling Medicare, but we all seem to find our way here, which is great. So, that's actually a great question. So for yourself, insurance, and then it's like somebody said, hey, Medicare's where you should park yourself, right? Or something to that effect. How'd that evolution kind of come for you?
Yeah, no, it's a great question because, I've said this a million times, I'm sure you guys have as well. No one really grows up wanting to be in the insurance business that I've ever met. And I'm sure there is someone out there, and they're probably like, their exception of like the 1 in 1,000 or 1 in 10,000 or something like that. But for me, I got into the business because I had a parent that was in the business. So my dad was an agent for 25 years before I got in. And that's how I even knew about the space entirely. So he brought me in as a downline of his, kind of started my own agency at 21. So this is year
Wow.
11 for me. So this is 11 years ago. I'm 32 now. And, he brought me in and kind of showed me the ropes a little bit. And I started, building my business. But he built his business in a time that was way different. Like he built his business in the 90s, early 2000s. So he was doing a lot of door knocking. He was doing a lot of cold calling for Medicare supplement, compliance Nazis
Right.
out there. And,
Yeah.
he was doing a lot of things that you probably wouldn't do today. And so that's kind of how I got started in the business. And then after a couple years, I got really good at it, but I just started thinking there's got to be an easier way. And that's when I really started kind of, teaching myself marketing, teaching myself branding, promotion, different ways to kind of grow my business. And, my business grew. We grew to a really big size. And then about 3 years ago, we bought his agency so he could retire.
That's
And
awesome.
that was like our first big agency purchase at the time. But yeah, no, I got into it like a lot of people, second generation, they had a parent into the business. It seems like a lot of younger people, that's a lot of times the trajectory, because, what 20-year-old, 21, 22, 23-year-old even knows about this space? Not many.
Right.
Yeah.
Yeah. And it's for young entrepreneurs. I mean, honestly, it's really a great fit. I mean, it gives you so much ability to just really grow your business as much or as little as you want to, right? There's so many
Mhm.
different avenues you can go in. There's so many different ways that you can do things in this business, product lines and whatever the case may be. It's really an avenue that I'm not shocked when I
Mhm.
see how many younger agents are in it now. I think a big part of it is like I mean, those influencers that, are putting it out there, and it's making it so that it's a viable option for a lot of people,
Yeah,
right?
yeah.
Yeah.
I mean, look, and we live in a world now where especially the younger generations, they don't want the traditional 9 to 5. And in this insurance world we live in offers that. It's also very content driven. I mean, I can't tell you how much I see insurance, like life insurance guys hopping on my For You page randomly talking about guaranteed income for life and teaching people that. And it's these younger guys, 20s, early 30s, right?
Yeah.
Teaching people about insurance, and they get tons of engagement. So you get kind of the best of both worlds. You don't have to get up and drive to work, and you also get to dish out content, which is what a lot of younger people want now.
Yeah. Yeah. I couldn't agree more. I mean, when I got started, in 2014, the average Medicare agent was a 59-and-a-half-year-old white guy.
Yeah.
And so you look at that today, right? Like I remember I would go to carrier meetings in my first few years. I'd go to meetings for my FMO at the time in my first few years, and I would be sitting in a training or meeting or whatever it might be, and I would just look around into the room, and it'd be a sea of, white heads, people with white hair, just a sea of them. And I would be the youngest person in the room, oftentimes by, at least 30 years. Um, and I'd be like, "This is weird." I'm like, "What is this?" Like,
Yeah.
I'm like, "Why is there no one my age doing this?" And it's interesting now because, now I'm a little older now, but also, you know, I will go to events. I'm invited to talk at a lot of events. We host an event, everything like that. And I will nowadays go to meetings and things like that. And I will see a lot of people that are in my age bracket. And a lot of times they're even younger than me. They're 22, 20 to 25 or 26, 27. And it's a super encouraging thing to see because our space really needs that to survive. We need a younger demographic to come in and take the reins and be interested. Um, because a lot of the old guard, as I like to call them, people that, are in their late 60s, 70s, maybe even 80s, they're starting to phase out. They're starting to retire. And we need new blood. We need fresh blood
Yeah.
to keep the space going.
When you're talking about you purchased, your dad's business, I mean, that's a great point. I mean, what does an agent or an agency owner do when they're looking to retire? I mean, what's the next
Mhm.
step? Because I mean, a lot of agents, and Christian, you can tell me if you've heard it a lot, but a lot of the agents, I don't think are really even doing succession planning at this point, or really even know what that process would be. Right? You work, you grow the business, you grow your book. I mean, at some point you're going to retire. Is everybody, you think, aware of all the different rules that the carriers have on continuing to get paid that commission?
Definitely
And
not.
to who, right? When does that make sense to sell the book versus, to just continue to certify and get paid? It's something I think that really we got to bring some more attention to.
Well, it's a morbid
Yeah.
thing, right? A lot of times you don't want to think about retiring because what are you going to do? A lot of times you don't want to think about life insurance because what you don't want to think about death, right?
Right.
But this planning is really important. And I think a lot of people don't understand what's at liberty by not doing succession planning.
Yeah.
Yeah, no,
Yeah.
I completely agree with that. And, I think the average agent is not super aware on the specifics of succession planning and kind of how that all works. Um, and they really should be because, as you guys accurately kind of pointed out there, it can be pretty problematic if you don't have any kind of succession plan. Maybe you don't want to even sell your business. Maybe that's not your ambition, or maybe that's way down the road for you. Maybe you're even a younger person, but the thing about it is, like, retiring, yes, selling your book one day, yes, but what if something unexpected happens? Like, let's say you die, is God
Right.
forbid, right?
Right.
Um, with the majority of carriers and a majority of policies, if you don't have your book of business set up correctly, if you're not incorporated, if you don't have everything, kind of laid out in a proper way, a lot of those policies can become house accounts, and all that work you did is just lost, in that way. And, your loved ones can't be taken care of, it's a problem. And,
Yeah.
I see it all the time. I had a situation a couple months ago. I had a spouse of an agent. She wasn't licensed herself come to me, and we did a call together because there was someone that I had a personal relationship with, and her husband had passed away, and he didn't do any type of succession plan. It was totally like unexpected. He was a younger guy, right, in his like late 30s, early 40s, and
Wow.
there was nothing set up. There was no corporation, nothing like that. She's like, "What do I do to retain this business?" I'm like, for the most part, there's not probably a lot you can do. At this point, it's a little bit too late now. Um, and yeah, it's just those situations are tragic. It's almost like someone passing away without life insurance. You know what I mean? Like you have no
Right.
protection, no safety blanket. And a lot of agents, they're just not aware of it, I feel like.
Yeah. It really, and you bring up a good point. Have they incorporated their business, right? Is, is their spouse even in the business, right? Thinking about, you passing away. Is your spouse getting licensed and getting certified? Right. So what's the process? And it's always a little bit, like everything in this industry, the carriers are all a little bit different in
Yeah.
their rules. Some might give you a little bit of a window for after you pass away. You got to send in your death certificate. There's a form you have to fill out. Maybe you can get the spouse licensed and then certified.
Yeah.
Maybe it gives them some time to sell the book of business is probably the case because, they're not in the industry. They may not want to, be in the industry. It's just a matter of kind of getting that business under them so that they can do something with it.
Yeah.
But
Mhm.
these are all questions and thoughts you have to have. And to your point, it doesn't mean that you're 60 when you're thinking about these things, right? Or 70, when you're now thinking about retiring. It can happen anytime, right? And why should the carrier get to keep the business to be a house account?
Right.
Yeah.
That's crazy to me. You worked your butt off to build this business.
Yeah. Yeah. 100%. 100%. I mean, and you hit it right on the head. It is going to be a little different from carrier to carrier. They're all going to have their own unique processes and things they're be willing to have wiggle room on and maybe not so much. But yeah, I mean, I think, for anybody that's watching this, in my opinion, I think the best way that you can protect yourself and put together that type of succession plan, this will also help you too if you do want to sell your business at one point, um, is for one, you want to get incorporated. You create a corporation of some kind. I'm not a corporation expert, so I'm not going to get into like LLCs, S corps, C corps,
Sure.
anything like that. But like, there's advantages, disadvantages to different ones, but you create a corporation, right? A legal entity that's not you. And the reason why that matters is because if all the business is under you as an individual, your social security number, you know, that's where you run into risks and dangers of them becoming house accounts, because if you're not around anymore, you know, it's tricky. But a corporation, anybody can step in and take over that corporation. It's not just about you, right? Like
Right.
you think about all types of companies, right? Like, you think of big companies, great examples that people might remember easier, like Disney, Ford, like their founders aren't around anymore. They've been dead for decades. But those companies live on and they keep trucking on, and
Right.
there's other people
Right.
running the companies. So that's almost like how you have to look at your business, I believe. And so you get incorporated. If you have a spouse, it's probably good to get them licensed, put them, as like a management spot in your corporation. They're on your corporation, and probably have a written up specific plan of succession if anything were to happen. Have it legally written up and everything like that. Um, and you're going to be in really, really good shape for the unexpected, that your spouse can step in and, they can either, to your point, run the thing themselves. They can just, keep the certifications up and keep the renewals coming. Um, or they could sell it, but they have
Right.
options at that point.
Yeah. So it's also interesting when you talk about the business and then them selling it. Um, and I think this is something where, it's probably just not known by a lot of people, but let's talk a little bit about if we could, the process. So
Yeah, of course.
I've got 100 clients. I've got 500 clients, whatever it is. What's my business worth, right? Is it a med sup that I have business? I have PDPs. So there's going to be some type of lifetime value assigned to each of these policyholders in some way, right? Somebody's going to do that, So when you did that for like when you've purchased books of business and whatnot, how does that sort of go?
Yeah, no, it's a great question. And over the years, we've bought in all different types of books of business sizes, right? We've bought smaller ones, 10, 20, 50, 60, 70 clients at a time, all the way up to 700 to 1,000 clients at a time. Last year in 2024, we did 3 different acquisitions, and we bought 900 clients over the course of that year. So not factoring in any business that we wrote that was new business. These are just clients that we acquired through acquisition. And one thing I've learned over the course of time is typically there's 2 different types of people that wants to sell their book of business. Because everybody, when they hear the term selling their business, a lot of agents get the idea in their head of like a private equity purchase, right? Or like an Integrity or an AmeriLife purchase, something like that,
Right.
right? Where they're coming in, there's these crazy multiples on EBITDA, everything like that. Um, and for the most part, unless you are an agency that is a huge scale, um, usually those groups, for one, aren't going to want to buy your business in that same way. 2, they're not buying just your book. And that's where agents, I feel like, need to get the difference really established clearly. There's a difference between selling your book, which is your clients, versus selling your business. And so selling your business is selling everything, the brand, the corporation, all of your data. Your employees now work for the new owner, and you as the
Right.
owner, they keep you on to run this thing. A lot of times when they're doing these big payouts, they're doing it because you agree to stay on for a certain period of time and run the show, steer the ship, as they say. And that's value to them because they don't want to run it. They don't want to. And if they find someone else to run it, they're not going to be as qualified or uniquely knowledgeable about the business as you are. It's your creation. So there's a lot more value in that. I say that to say there's a lot more value in companies that are buying businesses in that way. And so sometimes they can get these huge multiples. If someone's just looking to sell their book of business, oftentimes it's 2 different parties. Number one, it's an agent that has been doing this for a little while. Maybe they've been doing it a couple years and they just haven't gotten any traction. They want to get out of the business. They're like, I tried, this isn't for me, whatever the case might be. I want to get out of the business. And, I don't want to do my certifications anymore, anything like that. So they might want to sell their business. These are like the 10, 20, 50, 60, 70, 100 client base ranges. Then you have agents that are older and they want to retire. Maybe they're in their, mid to late 60s, 70s, maybe even beyond that. And maybe they don't have children. See, some of these guys, they'll have children where they've kind of groomed their child to come in and, kind of take over the business. In my father's situation, he did have a child, but like we did things so differently, because a lot of times parents will bring in their kids as an LOA. And it's like one day the kid will take it over. That wasn't the case. I was independent day one. And it worked out great for me, but I think my dad was nervous at the time. I was 21. I was knucklehead. I think he was afraid I'd come in and do something dumb and
I think
embarrass
we
the
all are
company.
at that point.
Yeah,
Yeah.
yeah. And so, but maybe it's someone that wants to get out of the business. They want to retire and they don't have kids. They don't have kids that can step in. And maybe they have 500 clients. Like we're working on a deal right now that's 480 clients. That's exactly the situation. Dude is in his 70s. Doesn't have any successors or anything like that, and he's just tired and wants to be done. So to answer your question directly on that, like, how do you determine the worth of that? Well, there's a couple different factors, right? Like looking at a book, there's a couple metrics that I always look at when I'm trying to determine as a buyer what I would want to pay for it. Number one, average age of the client. Because if it's a younger average age, the clients were probably more likely to stay around longer. If it's an older age, you have mortality to think about. 2, average age of the policy. That's really important because, especially on the med sup side, because as you guys know, commissions drop for med sup in a lot of states, in a lot of situations with a lot of carriers. After 6 years, with a lot of carriers, they just completely go away after 10, right?
Right.
So I want to know about that. I want to know the breakdown of, Medicare Advantage versus Medicare Supplement. What other policies do they have? How many policies on average are attached to each client? Do they have, dental, vision, hearing policies in the mix, hospital indemnity policies in the mix, cancer policies, et cetera? And what carriers are we dealing with, right? That might sound like something that maybe you wouldn't think about, but in my opinion, if I'm buying a client, not all carriers are created equal for me,
Yeah.
right?
True.
And so these are the things
Sure.
I'm going to be looking at. And I think it also depends on your business model. Like if you're looking to buy a book of business, it kind of depends on your business model. Are you local? Are you doing business all over the country? What is your business model? For us, we're national. We're licensed in 45 states, but we concentrate the majority of our internal book of business in Utah, where we're located, because we know the market really well. It's just easier for us to maintain. So I will value a client in Utah more than I'll value a client in Florida or North Carolina or Texas or anything like that, primarily because we know the market here better. We know the plans here better, and we're just at a sizable greater advantage to be able to service that client. So all of those things kind of factoring in together. Me personally, as a buyer, I usually always start at a 2x multiple of annual commissions. So what I mean by that is
Okay.
whatever someone's annual commissions are, times it by 2, and that would be the payout. Now, maybe for a certain book, it's justified to go a little higher. Maybe we can go 2.5, maybe 3. Maybe the person is willing to let us stretch the payments out over time. Maybe we don't have to pay it all as a lump sum. Maybe that's worth a higher multiple for us if we can stretch it out over time. Maybe it's a book of business that I really just don't want. Maybe like I look at this, I'm like, oh, this is terrible. I don't really want that, which we've had before. And maybe I'm only willing to pay 1x for that or 1.5x for that. So at the end of the day, right, it's almost kind of like buying a house. Like there's a house, maybe you're buying a rental property or something like that. You might go in and you're like, ooh, this house, it's a fixer-upper. But if I can lowball and I can get it for a certain price, maybe it's worth it. Maybe I can still fix it up, any kind of thing like that. But maybe if it's overpriced, I'm like, no, not going to happen, right? It's kind of like a case-by-case situation. But we usually start at that 2x multiple, and then we'll go up or down from there based on the qualities of the book.
Yeah, no, that makes
sense.
That makes a ton of sense. And just thinking about that, probably if they aren't local, you have to think about persistency, right? And then you're
Mhm.
looking at, am I going to have some kind of attrition on this block of business because I'm just not going to be able to, visit these people as often, or communication wise. I mean, once you buy that book, is it just you're reaching out to everybody at this point? I mean, you're sending out notification, hey, just to give you a heads up, we're taking over as your agent of record, whatever it may be. There's a letter that gets sent out. So probably the communication, do you try and meet with them all in person? I guess depends on the size of the book, whether that's even feasible, right?
Mhm.
How much contact can you have there? So that all factors in, which just makes a lot of sense. I mean, you've done over the phone stuff. I mean,
Yeah.
it's different.
Well, I'd imagine you got to lose, like when you buy a book, I'm sure you got to lose. There's got to be a number, right? It was maybe 5% or 10% just drop off because they don't want to deal with you, right? I'd imagine there's
Yeah.
some sort of like small number there. And I mean, I'd imagine you probably can't save everybody, right?
Of course. Yeah, no, I always say like you're at a sizable disadvantage with that client to start with because they did not sign up to work with you. They signed up to work with the writing agent. And then all of a sudden through no choice of theirs, their writing agent's gone. Now you're involved. They don't know you. I do think there's some things you can do though that can increase your likelihood of keeping that client exponentially. And so like some things that we do is, for one, we put everything into contracts when we buy a book of business. And one thing we typically always ask the selling agent to do is to be involved with the handoff, as they say. So because
Yeah, great point.
the people know that agent, they trust that agent. So like what we typically do is we'll have the agent write up a letter. We've had situations too where the agent's like, I don't know what to write. Can you guys write it for me and slap my name on it? I'm like, we sure can,
It got done.
So we're writing it up. It's like this group is amazing, but but like we'll typically try to send a letter out to that book of business, to those clients from that selling agent. And because it's going to mean more coming from them than it is from us. And basically what we wanted to say is, explaining why they're getting out of the business, thanking them for their business over the years, being very cordial, but then also edifying us as the group that's taking over, painting us in a very positive light for that client, endorsing us, if you will.
Right.
And, and we try to do everything we can to make that recognizable. Like if that agent has a logo of their own, we're going to put the logo on the envelopes. We're going to put the logo on the letterhead. We're going to put our logo on both the on the letterhead as well, their logo and our logo. So it's almost like they're seeing them together. Then we'll email those letters out for all the email addresses we have. Then we give maybe a week or two, and then we send a letter out just from us, a follow-up letter, basically introducing ourselves. And we hang our hat internally for our book of business and our agency on our service. I think we're known for our service. We have a book of business of multiple thousands of clients now. And we try to just, our message to them really is, we know you didn't sign up to work with us. We understand, but give us a chance. We think you'll be very impressed with the level of experience and service you get by working with us. And usually they
That's
are.
a good point.
Now, is there some segment of people that will just leave no matter what? Certainly. But I'm trying to get that number to be as small as possible. Ideally, if I can get that being under 5%, which a lot of times we can, and it kind of varies by book, but like if I can get that at 2%, 3%, something like that, I feel great about what we just did there. But I want to avoid that at all costs because, you paid for that book, and every client that falls off, it's just less and less valuable.
It makes a ton of sense. And we talked a little bit about, some of the stuff that's new in the industry and the marketing stuff. But I mean, even with the technology, I feel like we're in a technology boom in our industry. It's like you can't even like turn your head without some new CRM, some new feature to add to your CRM. I think everybody knows the word integration at this point, and API feed and all those. I mean, there's a lot of ways to really manage that situation, making sure you're touching the people a lot, utilizing a good CRM with the ability to touch those people without seeing them. I think just staying consistently in front of their faces will also cut down a lot on that. I mean, you've probably seen. I mean, you guys are probably top on technology as well. I mean, do a ton of that kind of stuff, and it's not going to slow down anytime soon, man. My whole feed on social media is just CRMs at this point. I think that's my whole feed. So do you feel as though, is there a time of year where it makes more sense to do it? I mean, is it earlier in the year? Is it later in the year? Does it even matter? Like, who cares? If it's summertime, you'll get a hold of less people, anything like that really impacts the number at all?
Yeah, no, I think that's a great question. And for me, there is definitely times of the year where I'd prefer to do it and opposed to not prefer to do it. I think obviously, right? Like it's not something I'd want to do during AEP, reason being is because there's so much chaos going on already with that client. And I think there's more of a chance because of all the chaos going on, they find out all of a sudden their agent's leaving, they have a new agent. They're a lot more likely to change. It's almost like AEP it's like Christmas season. Even if you don't like Christmas and Christmas season is happening, there's the Christmas music going on. There's Christmas movies playing. It's in every store. It's everywhere you look. Santa's at the mall. You go to the mall and there he is, You see homeless people dressed as Santa, like whatever, right? Everywhere you turn, there's Christmas. You just feel a little Christmassy. AEP is kind of like that for Medicare beneficiaries. They feel a little bit of the urge to change, revisit their plan, potentially change their plan if need be. And so you're at a really big disadvantage, I feel like. For us, like if the stars aligned, it doesn't always work this way, but like if we could get it done in the first 2 quarters of the year, I love that time frame. So like this one we're working on right now that I mentioned earlier, that's 480 clients. I was hoping we could get it done by the end of Q1. Doesn't look like it's going to be the case, but I feel like by the end of April, I think we can have it closed and done.
Right.
But I feel like the closer you get to AEP, the more of a danger you're in to lose a higher percentage of those clients. And so that's typically my rule of thumb. I mean, there's exceptions. Like I've had people come to me before where, they have 20 clients and that's December, first week of December, and they haven't done their certs for the new year. And they're like, I just want to get out of the business and I have to get rid of this book. I'm not going to do AHIP. I'm not going to do my certs. Like AHIP is like the boogeyman for a lot of people. Like, for me, I'd be like, I just do
Oh, we
I
know.
I just do if it was me, I'd just do AHIP and buy myself more time. But no, like, so I've had people come to me before where they're like, it's the last week of AEP, whatever the case might be. I need to get rid of this book. I need to get rid of it fast. I don't have time to shop it. At that point, I'd be like, this is not a good time of the year for us to do this. We don't really like to do this. There's a chance we lose more of the clients, that kind of thing. And so we're going to pay less for that just because of the time of the year. We'll do it. There's a number where we'll do it, but it's going to be probably, less favorable for the seller. It might be
Right.
closer to 1x. I had a situation just like that where I'm like, I'll do it for 1x. It's because I didn't really want to do it that time of the year. It's almost like I'm throwing out like just a lowball number because I don't want to do it. And she accepted because she
Right.
had to get
She
rid of the book.
really wanted to get out. Yeah.
had to
She
get
was
out.
like, I'm out.
Yeah. And so, there's situations where we might do it during AEP, but like it has to be something like that where it's almost like we'd be stupid not to, but
Yeah.
but preferably I'd like to do it first 2 quarters of the year.
Yeah. It makes a lot of sense. I mean, first off, these days AEP is 10 times more hectic, I feel like, than it ever
Mhm.
has been before
Yeah.
with all the changes that are going on. I couldn't even imagine trying to integrate a couple hundred new policyholders and
Yeah.
introduce yourself at the same time, trying to figure out what the best plan is for them and meet with them or whatever the case may be. And especially, we talk about all the turmoil, but AEP is a huge opportunity really to grow business as well if you do it right, especially
Absolutely.
now. I mean, there's
Yeah.
so much opportunity out there with all the plan changes and everything else going on. So, that's just a tough time to do a lot of other focus on
Yeah.
anything,
Yeah.
to be sure.
You don't want the distraction for sure.
Yeah. Yeah, absolutely. Yeah. And as far as the other stuff, man, I just got to think, if you're in this business, if you're a business person in general, I'll just say it, like, you got to plan, right? You've got to plan. If you're having a kid, you're planning on college. It might be 18 years down the road, but you might open that 529 plan, right? This is just a conversation as a business owner, that succession planning, that it's probably an inevitable, right? One way or another, you should be having this conversation today about what the plan is. Put something on paper. To your point, Christian, write it up. Like, what is the plan? Get incorporated, right? Whatever it may be.
And
right?
with tech, I mean, your life is so much easier. You can go
Yep.
online and incorporate online. Now, you're going to pay a little bit more money, right? That's what I did. I incorporated online. It cost me an extra like $250 or $300, right? But they did all the paperwork. I just told them what I wanted, and they created the LLC for me.
Right.
And then I always recommend, and if you are going to start a business, what I did, and this is what I always recommend our agents do, is create a basic LLC or a corp, right? Don't go name it Rob's Medicare Shop, okay? Because what happens if you sell your Medicare book, but you want to sell real estate?
Mhm.
My reasoning behind that is you can create something group or whatever, and then you could create DBAs around your group that do different things. Maybe you want to sell real estate. Maybe you want to sell Medicare. Maybe I don't know, you want to make video games, whatever it is, you can do that. And then you don't limit your base LLC, which everything's, pushed through. And you can do all of that online, and it's easy to do. It's not complicated. I think people get scared of the technology side of it. You can go online, there's websites that do it. You can do something like that. And then, I mean, even with the tech side of things, the cost isn't that much more.
Yeah,
when you're
and it makes sense. Listen, if you're really not sure, get a lawyer and
yeah.
have them do it for you. It costs you a little bit, but if you're really uncomfortable, talk to somebody about it, right?
And
You
and
get it
and
done.
and if you want a will done, yeah, go online. You can do it for free. You don't
Yeah.
even have to pay a
Yeah.
lawyer. There's free will websites, and you can
It's
put it in
true.
your will, man. I mean, the wild wild west is the internet, and the internet stays undefeated. But you can get out there and you can save money and still do these things we're talking about,
Yeah,
and be protected from anything crazy that could happen.
yeah.
Or time. I mean, time's an enemy of everybody
I
at this
know.
point. So
Yeah, no, if it's important, you make time, right?
yeah.
That's what you got to do. And this is just one of those things where you should feel like we should be shouting it more from the rooftops. The agents should be doing it. They don't know what they don't know a lot of times, and it can be a process, but get through it,
Yeah.
get it done. You're working so hard, you might as well put some time into making sure you're protecting the whole business by
And your
doing something
family.
like this.
And your
Mhm.
family. At the end of the day, a lot of this goes back to protecting your significant others too.
Yeah.
I mean, money's coming in. You don't want it to stop because then there could be issues.
Yeah, exactly. Yeah, Christian, it's such an important topic. I'm so glad we had some time to talk about it here today. I'm sure a lot of people will follow up. If we have some follow-up questions, I'll be sure to get with you on that. Any final words? I mean, you want to leave the agents with here, as far as succession planning, buying a book of business, whatever it may be, a little best practice.
Yeah, absolutely. Well, I'll start off by saying, guys, thanks for having me on the show. This was a blast. It was a lot of fun. I love, real insurance industry conversations like this. They're just a blast. They're my favorite thing. So I appreciate you guys having me on the show.
Yeah, absolutely.
Yeah, man.
So I would say my final thoughts, my parting and kind of advice is like, I think there's two sides of this. I think if you are an agent at all, you should have a succession plan laid out. It's not super complicated to do. Like it's been said on the show, right? It's so easy these days to create a corporation, get incorporated, get a will put into place, all of these different things. There's so many resources you have at your fingertips. And even if you want someone to just do it for you, you pay a little bit more. In my opinion, it's worth it because it saves your time, right? Like too many people don't put a dollar amount on what their time is worth. They'll put a dollar amount on everything else, but not their own time.
Right.
Yeah.
I would pay a fee to expedite anything, pretty much.
Oh, yeah,
I'm that
100%.
guy.
Yeah.
I'm like the prime, target customer for all of those businesses and services that like, you can pay extra, it'll be faster. I'm like, oh, Fast Pass, sign me up.
Yeah, Disney Fast Pass, man.
Yeah. But so that's one side of it. On the other side of it, for those of you that might be interested in buying books of businesses, I think one thing I could encourage you to do is the best way to find books of businesses to purchase is to just be around agents, going to events, going to, conferences, going to local events, going to carrier events, whatever it is. You're going to form relationships with agents, and some of those agents, one way or another, are going to want to get out of the business. So like that's the majority of books that we've purchased are people that we had a relationship with, people that I've known a long time. Sometimes it's agents that, are in our Facebook group or something like that. And just be on the lookout for these things because the opportunities do present themselves. And you don't have to buy $1,000 or 1,000 client book of business and to make it this big home run for it to really make impact. Like you could buy 25 clients and that's 25 clients you'll have in one swoop. You know what I mean? Just one transaction, 25 clients you didn't have before. And, I always say like, you don't have to hit the home run every time to win the game. Sometimes you can hit singles and doubles. And so just be on the lookout for, those types of things. And, they are out there. They will present themselves if you're paying attention and kind of looking for them. And I think it's important to understand that, hey, this is a way I can grow my business. This is something I can do if a opportunity comes up to help me kind of leapfrog everybody else.
Yeah. No,
awesome.
makes a ton of sense, man. Yeah, no, again, couldn't appreciate your time anymore. Having you on here, a lot of great information. I think it's something that's not talked about enough, but maybe we'll get the conversation going. We'll see a little bit more of it, man. But No, thank you again so much, Mr. Christian Brindle, joining us here on Insurance 360. Great day. And, we'll be sure to follow up with you. I'm sure we'll get some questions, man. Every
Yeah.
time we do these things, we get tons of feedback from the agents, a lot of questions, and we'll pick your brain some more.
We'll get you back on too. We'll get you back on.
Absolutely, guys. Anytime. Happy to do it.
Yeah. Thank you
Thanks,
again, man. Have a great day.
Have a good one.